All right, everyone. Welcome back on this Friday the 13th of October 2023. It's time to take a look at how I invest $1 million. So since last month, a little less than last month, because I think last month I did the update a little later, but roughly a month. Since last month, the portfolio is down about $20,000. I think we were at like 965 or something. And as of market close today, we're sitting at 946,438. So yeah, $19,000, $20,000 down. That's a 2% decrease from last month, but I actually feel pretty good about this portfolio. In terms of just looking at it, the allocations are right where I want it to be. Maybe some categories are slightly overweight. But they'll get corrected when I rebalance this. Gold just went up huge today. I mean, this is a pretty big increase, but to be honest, this is probably going to be called away from me because I do have this option sitting out here. But it's okay. I'll pick it back up. So no big deal. I think you're seeing this because of what's happening at the geopolitical level, which I'll get into in a bit. But overall, I'm happy with where I am, and I'm going to stick with this allocation, even given that all these problems that we have around the world and domestically. But before we get into some of that, I did neglect to mention that last month was the 2-year anniversary of when I made this portfolio public. So let's briefly take a look at it and see how things have done. So 2 years ago was September of 2021. So we were looking at September of 2021. The S&P 500 was at 44.58. And as the close of today, it's at 43.28. So it's certainly down. If I were to do the math on this from 2 years ago, S&P is down maybe 3%, 2.93%. I started my portfolio with $1 million. It went up a little bit in the very beginning, but then we're ending down at 946. So 946 is about a 5.5% decline over the last 2 years. So roughly within market. A little worse, but not terribly. It's roughly the same in my opinion. And if you look at the market, both the market itself and my portfolio is still underwater, but recovering. Back to the actual portfolio itself, the reason that I feel optimistic, even though we have some of these concerns out there on the geopolitical front and the domestic front, is that I do think that the 3 assets that are in here, aside from the NASDAQ, which I'll mention very briefly, is they're kind of at their bottom, right? I think long-term Treasury is going to go up from here. There's no other way to say it. I'll get into that in just a bit. The REIT and the large cap value, they've taken a beating, but I'm very comfortable with the price and the valuation level where they are, and I'll keep getting the dividends to reinvest in it, and we'll just let it ride. Gold is making a strong comeback for the geopolitical reasons, but it's there for a reason, right? It's supposed to balance things out when other things are going down. Back to the long-term Treasuries, I think that it took quite a beating over the last year and a half. Only because people are finally believing the market, what the Fed is saying to the market, that we're going to be in this higher for longer environment. I think before it didn't go down as much because people were still thinking that, rate hikes could stop and they're going to, start decreasing again. And I think now the market is catching up to what the Fed has been telling them. So as a consequence, over the last couple of months, long-term Treasury took a really big beating. But I think that beating is at the end. At the last meeting, the Fed did say that there may be one more rate increase for by the end of the year, maybe another 25 basis point. Well, we still don't know if that's going to happen. But even if it does, I think what happens after that is that they're going to just pause for a while. Now, is that while 1 year or 2 years? No one really knows. But they're going to pause and they're going to look at inflation and see where things are, how the movements that they've done with interest rates are going to affect the market and the fundamentals, and take things slowly. What I do know is that in the long term, they do not want to see long-term rates sitting at whatever it is today, 4.6% on the 20-plus year bond. They don't want that. So if long-term bonds go down, an interest rate by like say 2% down to like 2.6% on the long term, which is certainly possible and reasonable, we're going to see like a 41% capital gain increase on the price of bonds, right? Because they move inversely to each other. So I really think from here, long-term bonds are just going to go up. We'll see how that prediction holds. If I had to be worried about anything, it's actually the large cap growth as represented by QQQ in my portfolio. But even there, I'm not that worried about it. So what's happening with the geopolitical front? Well, everybody's aware of the Hamas surprise attack on Israel, and that the Israelis are going to retaliate. This is going to cause suffering on both sides because the Israeli citizens who were killed or kidnapped or displaced when Hamas attacked Israel are suffering. But in the retaliation, the Palestinian civilians are going to suffer as well, even though they don't have much of what Hamas did, right? They're just kind of bystanders. So you're going to have all this violence in the Middle East again. A lot of people are just unsure about how things are going to shake out there. Will it spread? Will Iran get involved? Will Hezbollah get involved? No one really knows, but it's a bit of an unstable situation at the moment, and people are worried. I think signals have been sent for other players to not try to take advantage of what's going on right now. So we're going to have to see how it all plays out. But that's certainly an event worth watching and following. Of course, the Russian aggression against Ukraine continues, so that's another thing to watch out for on the geopolitical front. And then at home, we have our own issues with the Chaos Caucus of the GOP, right? They ousted their speaker. They let a very small minority of their party kind of take control. And they ousted the speaker, and now they can't elect a new one. This drama is just going to keep on going unless, cooler heads prevail. I don't see the extreme right wing of the GOP compromising at all. So the moderates are going to have to stand up. They are in much bigger number, and they have to put a stop to this one way or another. Either they pick a consensus, figure within the GOP. I don't know who that would be at this moment. Or they compromise and work with the Democrats to elect that moderate GOP speaker. Because we are, another month away from another potential shutdown because we had a continuing resolution for 45 days, right? So we have problems. And because Congress is dysfunctional right now in the House, even if the Senate comes back and wants to do something to support Israel or to support Ukraine, they can't without the House being a part of it. So the longer this goes on, the bigger the issues. So problems abroad, problems at home, but in terms of my own personal portfolio, I'm actually feeling pretty good. I'll keep on sharing what's going on with the portfolio because really the only thing that's going to happen going forward is the annual rebalancing. But it's a chance for you to kind of just see how a real portfolio is invested and how it's managed. And it gives me a chance to just kind of talk about what's on my mind with the economy and with political events here and abroad, and just connect with you all. All right. Thanks for watching, and I'll catch you on the next video. Later.